With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB on this Friday. I'm Andrew Gagan. Thanks for joining us as we wrap up the day and the week. And goodness, what a week it has been, certainly in terms of, it's only been a 4-day week, but it seems longer. And of course, that's accentuated by what we heard this morning. And that was at about, 10:30. You can see where the market went after this news that Iran had been struck by missiles from, well, in fact, it was an airstrike from the Israeli Air Force attacking key nuclear facilities in Iran, and the Israeli Prime Minister Benjamin Netanyahu warning that there would be more to come. This would be a multi-day operation, whereas Iran, in response, has said they are preparing a retaliatory response. It's unclear as to what form that will take. So as a result, we did see share markets fall across Asia, including the ASX and CBOE there. Futures on Wall Street down around 1.5%. And we have seen that flight to safety with gold and some of those currencies, the yen, Swiss franc and the US dollar moving higher, the Aussie coming off as a result. And oil, also the oil market hit. We did see those oil stocks rise significantly given the threat that is posed to supply in the Middle East. So that brings us to the themes of the day. And that was certainly the case of Israel versus Iran. So as I said, much more to come on that. The world is watching nervously. ASX has retreated and those safe havens are in play at the moment. All right. Well, let's get across what we're seeing more broadly at the moment, and just in terms of the sectors that have been moving today in response. Beginning with energy, as I mentioned there, those oil and gas stocks doing very well today on the concerns about just the impact to supply out of the Middle East. So Woodside leading the pack up some 7%. Elsewhere, those gold stocks, as mentioned, doing very well, led by the likes of Evolution and Newmont, Northern Star. They are all higher as the gold price moved above 3,400, perhaps within striking distance of that all-time record that's just above $3,500 US. Checking in on the defence stocks, interestingly, a bit of divergence there we saw with Electro Optic systems, obviously the best of them, along with Austal, but Droneshield actually was down about 2.5%. Earlier in trade, making a bit of a comeback there. Checking in on the REITs, just a little mix there. Goodman Group managing to fall into the green, but pretty much red across the board that we're seeing in the REITs at the moment. Let's just catch up with the top corporate stories then. And Rio Tinto is investing $8.5 million in integrating ore sorting technology at Electro Mining in Quebec in Canada. Accent Group, those shares have tumbled, as you can see, down around 24% amidst challenging trading conditions, forecasting full-year earnings of between $108 and $111 million. So a severe downgrade there, and shares been punished as a result. The Reject Shop has affirmed its intention to pay a fully franked 70-cent dividend to shareholders as its takeover is pending. Dalrymple Bay has fallen. Majority stakeholder there has pulled out its 23% stake. And Euroz Hartley surges on a capital return plan. Well, let's now get some reaction to what we've seen today and more broadly what has transpired across the course of the week. Shane Oliver, Chief Economist at AMP, joining us now. Shane, welcome back. Good to see you. Of course, news dominated by what we've heard in terms of that strike from Israel on Iran. What do you see as the market implications, reflecting on what we've seen on the markets? Obviously, equities taking a bit of a tumble across the globe and that flight to safety.
Yeah, interestingly, the Australian share market's taken it reasonably well. I kind of wonder whether Aussie shares are sort of becoming a bit jaundiced about all the international news, and so you're not seeing the same degree of reaction that you'd normally see. Obviously, oil prices were hit very hard on the upside, and that's understandable given the threat to oil supplies if Iran retaliates, for example, by involving other Gulf countries in their retaliation, or disrupting supplies through the Strait of Hormuz, through which about 20% of global oil consumption flows daily. So you can understand why oil prices have gone back up. Out of interest, they're back to where they were about a year ago, and also levels seen last October when Iran and Israel last traded missiles. So it's sort of like an understandable reaction. I think US futures are down a bit more than our markets. Our market has fallen by, but obviously this is a new source of uncertainty thrown into the mix. It's probably, you could argue, a bit more serious than what we've seen in the last few years regarding Israel and Iran, given that it is an attack aimed at neutralising Iran's nuclear weapons capabilities. It could well be that even though the US says they're not involved, that they may have given a green light to Israel in some way to do this, to try and force Iran back to the negotiating table. But obviously time will tell. A lot will depend in the short term on how Iran retaliates and whether there is actually disruption to oil supplies. If not, we'll just go back to normal and markets will start thinking about other things again. But for the next little while, I suspect it's going to remain fairly tense and fairly volatile.
Well, yeah, because the Israeli Prime Minister Benjamin Netanyahu has warned that this operation is going to take days. So potentially, and of course, we'll yet to hear what that response will look like from Iran.
Right.
A good deal of cynicism there, though, too, because we did hear from Donald Trump overnight saying, well, those negotiations are going very well with Iran. So it'd be interesting to see where that leaves him.
What the story is
right now. And as a result, also, you mentioned oil. Look, we have, obviously the US dollar has been under pressure of late, but we have seen that strengthen as a result, along with gold too, Shane.
Yeah, so oil is understandable. That's a potential supply threat. Gold is safe haven demand. We also saw bond yields push down a little bit further. Again, safe haven demand. Normally with these events, the US dollar goes up a little bit, the Aussie dollar comes down. We've seen a bit of that, although over the course of the week, the Aussie dollar's about where it was a week ago, and the US dollar is down a bit. But yeah, you've seen the normal safe haven demand, and investors trying to get out of risky assets given the threat this poses to growth. An obvious question is, will this add to inflation? You know, if current oil prices remain where they are, then our calculation is that it adds about 12 cents a litre to Australian petrol prices, and you obviously see a flow on in other countries around the world. Central banks, I reckon, probably will look through that. I don't see central banks jumping at that any more than they jumped at the gyrations in the petrol price over the last 12 months, 24 months.
Yeah, in fact, we're going to hear from the Fed and the Bank of England next week.
That's right. It's a fairly busy week for central banks, not only the Fed and the Bank of England, both of whom will probably leave rates on hold. But we've got the Swiss Central Bank, which will probably cut 25 basis points. We've got the Swedish Central Bank, which will probably also cut by 25 basis points. And we've got the Bank of Japan, which like the first two, will probably leave rates on hold. So another one of those weeks dominated by central banks. The interesting one might be Switzerland, because Switzerland currently only has a cash rate of 0.25%. So if they cut by 0.25% as widely expected, they go to zero. And the big concern there is that the Swiss franc has been very strong. That's causing deflationary pressures in Switzerland. The Swiss Central Bank is trying to head that off. And so it's quite conceivable that maybe not next week, but in subsequent months, they actually go negative. And then we're going to have all that talk again about negative interest rates globally. But I don't think that other countries are going to be following Switzerland into negative rates.
Goodness, we didn't think we'd hear that again post-COVID. Shane, also this comes amidst ongoing trade tensions. Now, of course, we did get those talks between China and the United States earlier this week. The Americans saying, look, the great breakthrough, look, very good talks. We didn't really hear much at all from the Chinese, but at the end of the day, those tariffs still 55% on Chinese goods.
That's right. They're still where they were. The 55% surprised everyone, because most people's calculation is that it's 41%. So 11% initially, 20% fentanyl, 10% reciprocal, you get 41%. Trump seemed to up that to 55%. So that was a bit higher than I think most people have calculated, and shocked a few people. But whatever it is, it didn't change anything. All it meant was that we go back to where we were straight after the Geneva Agreement, when the tariffs were dropped from 145% to down to the 30%. These numbers get very confusing, I know. But so nothing's really been advanced here. All we've done is gone back to the starting line and relieved some of those tensions around rare earths or magnets and other things, and the ban on Chinese students studying in the US and the technology flow to China. So we've just set back a bit, but to where we were, but it hasn't taken the tariffs away. In the meantime, you've got Trump out there saying that he could impose in the next week and a half or 2 weeks, tariffs on various countries that haven't yet come to a deal with the US. So I guess, heading back towards those reciprocal tariffs on Liberation Day. He's talking overnight about a tariff on autos, raising that from 25% maybe to 50%, which is where it is for steel and aluminium. So the story hasn't gone away. It's an ongoing story. You could argue that Trump's trying to distract from it, because there's no better vote winner for populist leaders than a crackdown on immigration. We do that a few times every so often in Australia with, stopping the boats, all that sort of stuff. So they're doing the same thing in the US. And that, Trump is seen as popular in doing that. And who better to attack than liberal, a small US liberal, California. Yep. So he's got a bit of theatre going on that front in the meantime, which some might argue is a bit of an off-ramp for the tariffs, because the tariffs have created mayhem. They're not popular. They're just going to raise the cost of living in America. So, we could de-emphasise that and re-emphasise immigration, which I suspect is where he might ultimately end up pivoting to.
Well, of course, we have Anthony Albanese potentially, looks as though they will get to talk to Donald Trump in the G7 summit that's coming up. But, and I guess AUKUS is going to be front and centre there in terms of negotiations. But also this week, Shane, we heard from the Prime Minister, he's setting up a productivity round table. What's likely to be discussed, and potentially what could the outcome of that be?
Well, there's a long list of things that I think will be discussed. And of course, these are the sort of things that economists like myself for many years have been talking about: tax reform, deregulation, improving the education system, improving productivity in the health sector, the care economy generally, and so on. Those things I think will be high on the list. I suspect business will push the case very hard. I think the reality is that if we want to get our living standards up after the malaise of the last little while, we have to boost productivity. We have to work more smartly. The only way to do that is to do these sorts of reforms. The question is whether the government really wants to go hard on the sort of reforms that are necessary. So I suspect that we will see action. We will see things getting done, but they probably won't be going the full way that, say, a Hawke Keating or a Howard or Costello might have gone in generations past. And so that could end up being a bit of a disappointment, given the government's already said that industrial relations reform is off the table, and they're not going to backtrack on the two changes they've already made. That sort of puts a bit of a dampener over it. But I reckon you could make progress. A sensible government could make progress. I think there's general agreement that the income tax system is not working properly. We need to rely more on the GST. Now, obviously, so the Greens would sort of not like that idea, because it means GST is regressive, so they'd say that it's bad for low-income earners. But you could compensate for that. You could also go to the Greens and say, well, if you support this, then we'll wind back the tax concessions on property a little bit, or maybe consider raising some revenue from gas exports, as Ken Henry was suggesting through the week, as a bit of a compromise. So you could get either side of politics together on all these sorts of issues, coming up with something which has general acceptance. Hopefully, though, politics doesn't get in the way, and you just get blocking from people going to extremes and talking against all these sorts of things. And that is the risk in all of this. But sensible, common sense discussion around this could yield outcomes. And I'd hope to say that it is good that the government is talking about this. It started on the day after the election with the Treasurer mentioning it on a TV interview at the time, and it's good to see the Prime Minister following up.
Gee, sensible in politics, does that fit? Shane, I can't let you go and without a mention of the Beach Boys. I know one of your favourite bands, and this week we lost the heart and soul of the band.
We did. It's been happening over the years. Dennis Wilson died, I think, 1982, and he was the drummer. And Carl Wilson, the beautiful voice behind God Only Knows, died in 1998. And, of course, that left the core of Brian, Mike Love, Al Jardine and Bruce Johnston. And, of course, in recent times, was his name Howard Marks, I think it is, or maybe I've got the name confused there. But and they toured here in a reform band back in 2012, which I thought was fantastic, and put out a new album with a song called "That's Why God Made the Radio." And they were renowned for making these classic symphonic radio hits. So a very depressing day for me yesterday, hearing that Brian had passed on. I've seen him, I think, about 5 times. I've seen the Beach Boys, Brian Wilson iteration about 8 times. Of course, he wasn't there all the time. But of course, his music lives on. And of course, if you don't know the Beach Boys, I think most people would recognise some of their songs because they're re-recorded over and over by different artists. And most nights on the TV, one of them pops up in an ad. So those songs are classics in the great scheme of things. And I do see them as mini symphonies, as Brian Wilson once described them as. Interestingly, a lot of people talk about Pet Sounds, and it is a fantastic album. God Only Knows is one of their best, I reckon, but it's probably not my favourite album. I'd probably rate Sunflower from 1970 as their best album. That's the one I've obsessed over the most, followed by 2020, which came out in 1969.
Well, no doubt the sounds of the Beach Boys were resounding in the Oliver household this weekend. Shane, terrific to have you on the show again. Thanks for joining us.
Thanks. Thank you. Have a good weekend.
You too. All right, let's get to our stock, or as the case may be, stocks of the day. Now, we're joined by Andrew Coleman from Team Investor, Mark Garner from NBC Markets, to pick a stock in times of global uncertainty and danger, essentially, given this response to the Israel's attack on Iran. Now, Mark, he came up with the VanEck Global Defence ETF, DFND, and Andrew picked the Navigator Global NGI stock.
Navigator Global Investments has been completely overlooked by the market for the last, I would argue, at least a year, but certainly for the last few months, as you can see there in the stock price. Here is a company that has incredible stability, incredible growth, and incredible return on equity, all off the basis of investing in alternative asset managers. And if there is going to be one beneficiary from market volatility and market fear, it's alternative asset managers, right? Because they're offering super funds and large institutions a safe haven for their capital.
Look, we have dabbled in Droneshield and things like that here in Australia, but overall, I think the ETFs is the good way to go if you're more of a passive investor, and because we're going to see those European countries having to spend more and more, and when we're talking an increase of from 2.5% to 3.5% of global GDP, countries are going to want to spend that at home if they're not, because Trump's already made it very clear he wants people to pay to be defended, and you can see that in the way he's responded with Netanyahu as well, because he's basically said, "You go for it. You know, we're happy to not be involved."
All right, let's sum up the best and worst then in today's market. The energy stock's doing very well, along with the goldies, given the outbreak of that conflict between Israel and Iran. Crude up some 11%. Woodside also impressive, around 7% higher. And as I mentioned, a lot of those goldies led by Capricorn, which is up more than 6%. The laggards, Neuron Pharmaceuticals, has come off. Clarity, which has been on a bit of a tear, so maybe some profit taking there, but obviously matching the risk-off sentiment we saw after that news out of the Middle East. Polynovo Credit Corp among those losers. Also, those travel-related stocks, including Qantas, down some 5%. And in the small cap space, Amero is up some 17%. New merchants in gold among those gold stocks that are doing well today. Electro Optic Systems in terms of defence stocks doing very well. And negatively, satire after updating the market off some 22%. All right, let's check in what's going on overnight now. Of course, front and centre, the Israel-Iran conflict, to see that what develops overnight. Also, we get inflation read out of France and Germany, EU trade balance and consumer sentiment in the States. And ahead next week, we can look forward to Bank of Japan rate decision, also the FOMC, the Bank of England also making its decision there. And in Australia, we get jobs data as well. All right, let's recap then where we're finishing the week. And on the SIBO, we're down 0.4% for the day. On the ASX, it was 1/5% lower. And for the week, gaining around 0.33%. Thanks so much for joining us today and for the week. And we'll do it all again next week, of course. Thanks for watching and listening.